Good morning, listeners, and welcome to the Trade Talk podcast. Friends, today, except US stock futures, other flows are not that positive. Crude oil is around 104. Dollar index is above the levels of 100.2025, and 10-year bond yield is around 2.75. Even India's CPI inflation stood at 6.95 versus 6%. So all these flows are not that positive, and we are of the view that the market should remain under pressure. Yesterday we saw good amount of activity in the market. Market remained volatile. After opening lower below the levels of 17,600, we saw the quick sell-off towards 17,450, 440, where the market was having support of 20 days simple moving average. From there we saw sharp surge, but towards the end again we saw some profit taking. 17,600 acted as major resistance for the market, and despite attempting to cross the levels of 17,600 in the second round of buying, we saw the market closing little lower. The bank Nifty was much better as compared to Nifty. The bank Nifty has managed the levels of 37,200, 37,250. From there we saw recovery, and it closed around 37,700 levels. But broadly we are of the view that till the bank Nifty is below the mark of 36,000, we are going to see range bound activity for the bank Nifty. And for Nifty we are expecting 17,600, 620 would be the immediate resistance level. Above that, 17,700 would be the next level to watch out for. On the downside, below 17,440, we can expect further more weakness, maybe up to 17,300 or 350. Broadly, the way the market has broken the level of 17,600, we are of the view that the next important level to watch out for would be 17,200 in next few days. Apart from indices, if we go through with sector specific activity, then we saw some profit booking in all metal companies, and if there is a medium to long term view, then we should look for adding them. But otherwise, for trading, it is like better to stay away for the time being, as they are going to remain highly volatile. Technology stocks have shown some sideways activity, and after the result of Infosys we may see some action, but Infosys currently available at important and crucial support levels. In case if there is any further more weakness, then the possibilities of hitting 1650 or 1660 would turn bright, but broadly 1750 and 1650 acted as major support for the stock in last few weeks or few months. Also 200 days simple moving average is also placed at 17,000, around 1730, 1740 levels for Infosys. So whenever we see stock was falling to the 200 days simple moving average, we saw recovery in the past. Yesterday also there was like sideways sort of activity after hitting the levels of 200 days simple moving average, and today if we see any specific activity in technology companies, then we can expect upside for Infosys. Auto companies did well in the second half. In that, Mahindra and Mahindra looks good. There we have a bullish view based on its technical formation, and from the financials, almost all the stocks close at the highest point of the day. So there also we can expect further more activity if we see the bank Nifty crossing the levels of 36,000. Friends, that's all from my side for the day. With this, I am ending today's morning podcast. Thank you and have a great day to all of you.